Today, I would like to talk about the remarkable journey of the Indian stock markets, which have hit record highs, bolstered by global developments, particularly the U.S. Federal Reserve's decision to cut interest rates by 50 basis points. This monetary easing cycle, marked by the largest rate reduction in years, has sparked optimism across financial markets globally. Indian shares have not been immune to this positive sentiment, with expectations of rising foreign inflows into the domestic markets driving the benchmark indices higher. Let's begin with the performance of the key indices. The Nifty 50 index gained 0.15%, closing at 25,415.8, while the S&P BSE Sensex added 0.29%, settling at 83,184.8. During the trading session, the Nifty even touched a new all-time high of 25,611.95 before profit booking kicked in, causing it to retreat slightly by the end of the day. While the market experienced some volatility, these levels represent a significant milestone, underlining the resilience of Indian equities in the face of global economic uncertainties. The driving force behind this upward momentum is, of course, the U.S. Federal Reserve's much-anticipated 50 basis point rate cut. By reducing interest rates, the Federal Reserve aims to support economic growth in the United States and mitigate the risks posed by slowing global demand. This move is seen as highly favorable for emerging markets like India, as it is expected to boost foreign investment in Indian equities. Lower interest rates in the U.S. often lead to a weaker U.S. dollar, making Indian stocks more attractive to international investors. In the short term, this monetary easing cycle is likely to spur increased capital inflows into India, further strengthening our financial markets. Despite the positive global sentiment, Indian investors displayed a somewhat cautious response. Instead of celebrating the move with a massive rally, the market witnessed profit booking, particularly in sectors that had performed well in the recent past. As a result, while the broader market indices closed higher, the gains were relatively modest compared to other global and Asian markets. Let's take a closer look at sectoral performance. Initially, the IT and pharma sectors experienced gains of about 1% and 0.6%, respectively, in early trade. However, as the session progressed, these sectors reversed their early gains and ended the day down by 0.3% and 0.4%. This profit booking is a clear indication that while the long-term outlook remains positive, short-term volatility persists as investors seek to capitalize on recent gains. On the other hand, banking, consumer, and realty stocks emerged as the day's winners, each adding about 0.5%. The banking sector, in particular, is expected to benefit from lower interest rates, as it makes borrowing more affordable and stimulates credit growth. Realty stocks, closely linked to interest rate movements, also saw a positive uptick, with the hope that lower rates would boost the demand for real estate. The consumer sector, meanwhile, continues to benefit from a stable macroeconomic environment, supported by rising consumption and demand growth. However, not all sectors shared in the optimism. The oil and gas index shed 1.3%, with oil marketing companies leading the decline. This drop can be attributed to concerns over global demand for oil, as well as the recent volatility in crude prices. While the Federal Reserve's rate cut may provide some relief to global markets, the uncertainties surrounding oil demand continue to weigh on the energy sector. In this context, it is important to understand the broader implications of the Federal Reserve's decision. A 50 basis point rate cut is a significant move, and it signals the central bank's commitment to ensuring that economic growth remains on track. For India, this decision could provide a much-needed boost to foreign inflows, as investors seek higher returns in emerging markets. Moreover, a softer U.S. dollar could benefit sectors such as metals, which become more affordable for holders of other currencies, and potentially spur a rally in commodity markets. However, while the long-term outlook for Indian markets remains positive, the short-term picture may be more nuanced. As we have seen today, profit booking and cautious sentiment can temper gains, even in the face of favorable global developments. Investors are carefully weighing their options, balancing the prospects of further gains with the need to protect profits. In conclusion, Indian markets are navigating a delicate balance between global optimism and local caution. The Federal Reserve's rate cut is undoubtedly a positive development, one that is likely to fuel increased foreign investment in Indian equities. Yet, as today's trading session demonstrates, the market's response is not always straightforward. As we move forward, it will be crucial for investors to keep a close eye on global economic trends, as well as domestic factors, to make informed decisions. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.